Hello class, welcome to my video. This video is for your Financial Accounting 2, Chapter 7, Cash Flow Statement. So, what you can learn in this chapter? Upon completion of this chapter, candidates should be able to explain the importance of cash flow statement, and also you can interpret the cash flow statement and prepare a basic cash flow statement. So, what is cash flow statement? Cash flow statement shows the cash inflow and outflow of a company during a period of time. User of the cash flow statement can understand the company's ability in generating cash. Cash flow statement is important for user to evaluate the performance of the company, as profit will not equals to cash. So I think this is now close to your end of your FA2. We know that some of the accounting entry is not involved in cash. For example, we have depreciation. Depreciation, do we have cash involved in the depreciation? No, right? So what are the examples? We have bad debts. Bad debts also not involve the use of cash. Again, example, we have provision for doubtful debts. Those are the transactions that without the involve of the cash, because these are merely accounting adjustment. So because of this issue, we can understand that profit not equals to the cash of the company, because not all accounting entry with the use of cash. That's why a solution for this issue, we prepare a cash flow statement. So in this chapter, chapter 7, you can learn the details of cash flow statement. You can understand how to prepare a cash flow statement. So this is a sample of cash flow statement, and for your diploma level, we only learn the indirect method, and the indirect method is the commonly used method in the corporate. Okay, so normally we will use indirect method to prepare the cash flow statement. So basically, cash flow statement, we have 3 sections. The first section is called reconciliation of net operating profit to net cash flow operating activity. So this is the first section. So what is the information that we can understand in the first section? Let's turn to page 107. Component in cash flow statement. This is the first part, first component in your cash flow statement. Operating activities. Cash flow from operating activities indicates cash inflow or outflow from the daily operation. It is essential for us to understand the company's ability in generating cash. Steps for preparing cash flow statement from operating activity are as follows. So we have a step to follow and to guide us when we prepare operating activity in the cash flow statement. Step 1, we have to identify profit before tax. Why we start from profit before tax? Because tax is not equal to tax paid. The tax expenses will not equal to tax paid. So we start from profit before tax. Next, step 2, identify non-cash transaction in income statement. Expenses will be shown as a positive value and income will be shown as a negative value. Why we have to adjust the expenses as positive and income as negative, I will show you in the later when we prepare the cash flow statement. Step 3, identify the changes in working capital. Basically, we have 3 working capitals, which are inventory, receivables, and payable. So we know the company working capital, the inventories, receivables, payables, they may change during the period, right? So basically, we have identified 4 possible outcomes, which is increase in asset, decrease in asset, increase in liability, and decrease in liability. So what is the impact for increase in asset in our cash flow? increase in asset, it means that cash outflow. So we have to show negative. Decrease in asset is show cash inflow. So we have to show positive when we prepare the cash flow statement. So you may confuse this. Why increase in cash we have to show negative? Why decrease in asset we have to show positive? Let me explain to you. So we use inventory as an example. We know inventory is our current asset under working capital. So this inventory we have 2019 amount and 2018 amount, and we are currently doing 2019 account. Let's say my inventory currently is 10,000. In the previous year is 8,000. So tell me, what is the movement between 2018 and 2019 inventory? Increase or decrease? From 8,000 to 10,000, this is increase in inventory. So what is the meaning of increase in inventory? Increase in inventory, it means that you buy more. You buy more stock for the business compared to prior year. You buy more stock for the business as compared to prior year. That's why you have an increase in your inventory. If you buy more, you have to pay, right? You pay more for the inventory. What is the impact of your cash? Your cash will reduce. So in the cash flow statement, in your cash flow statement, when your cash reduce, we show negative amount. Let me give you another situation, which is your trade receivables. So situation 2, trade receivables. So trade receivable is our current asset as well. So we have 2 years figure, 2019 and 2018. So let's say 2019 is 20,000, 2018 is 30,000. This is the example, and we are doing 2019 account. So what is the movement between your trade receivables in year 2018 to 2019? We can understand that from 2018 30,000 to 2019 20,000, this is decrease. So what is the reason of decrease in your trade receivables? It means that you collect more cash from your customer. Am I right? Because trade receivable is your uncollected amount. If your trade receivable reduce, it means that in this year you collect more from them. If you collect more from your customer, your cash is increase. So when your cash increase, your cash flow statement for cash increase, your cash flow statement will show a positive amount, because this is cash in to the company. So this is the explanation for current asset, inventory and trade receivables. I have explained 2 situations. One is your current asset increase, another one is your current asset decrease. So when you understand this concept, you just change a different direction. When this decrease, then you can understand why it changed to a positive. So this is the explanation why increase in your inventory or increase in your current asset, we have to show cash outflow, which is negative, and why when your current asset decrease, we have to show cash increase, which is a positive. Next, another situation we may meet is increase or decrease in your liability. So when you increase in liability, it means that cash inflow positive, because you pay less amount to your supplier. if your decrease in your liability, it means that cash outflow, which is a negative amount, you are paying more to them. So let's illustrate this situation. So this is situation for the trade payables. So this situation is your trade payables. Assuming that in the year of 2019, your payable is 50,000. In the year of 2018, your trade payable is 30,000. So we are doing 2019 cash flow statement. From here, we can understand that your trade payables amount increase, right? So why your trade payables will increase? If your trade payables increase, it means that in this year you pay less amount to them. When you pay less to them, this is your cash will increase because you keep more cash with you. So in your cash flow statement, if your cash increase, you show a positive amount. Another situation, let's say this year your trade payables is 100,000. Previous year is 200,000. From 200 to 100, we can understand that your trade payables decrease. Am I right? From 200 to 100. So when your trade payables decrease, what are the reasons? It means that you pay more to your supplier. When you pay more to your supplier, your trade payables will reduce. So when you pay more to your supplier, your cash balances will decrease. And the impact on the cash flow statement, the cash flow inside your cash flow statement, you will show that your cash is a decrease, so you will show negative amount. You will show negative amount when your cash decrease. So that's all for the explanation when your current asset increase or decrease, and when your current liability increase or decrease. Next, we have to identify. Step 4, compute the cash flow from or used in the operation. Next, step 5, we have calculate the payment or receipt of interest, tax and dividend. Receipt will be shown as positive, payment will be shown as negative. So we have complete the explanation for the first component in your cash flow statement. Second component is your investing activity, and what we can understand from the investing activity. Investing activity, which is the second portion in your cash flow statement. Cash flow from investing activity shows the cash received or paid from their investment in non-current asset. In this part, we can understand that whether sufficient fund has been allocated in investing the company's non-current asset to expand the company. So what are the examples in our investing activity? Payment to acquire non-current asset, so we will show negative because payment is outflow. And for the receipt from the sales of current asset, we show a positive because this is inflow of cash. And the third part of your cash flow statement is called financing activity. So what we can understand from the financing activity, Financing activity. Cash flow from financing activity indicate the cash inflow or outflow in relation to their capital, long-term debts and equity. In this section, we can understand that whether the company has raised funds from borrowing and equity or making repayment of debts. Generally, repayments of debt is good sign as the company is reducing their leverage. On the flip side, raising funds in consecutive years may indicate that the company has to get more money from shareholders or banks to maintain the operation. So what are the things that we will record in the financing activity? Issuance of ordinary share. So when you issue share, you can get money, right? So it's a positive amount because this is a cash inflow. Repayment of loan. Repayment of loan is a negative amount because this is a payment, so your cash will reduce. So when you get loan from the bank, this is a positive amount because of cash inflow. And next, after you have compute your operating activities, investing activities, and financing activity, you will get what is the net increase or decrease in your cash. This is the sum of your net cash flow from operating, investing, and financing activity. It means that 1 plus 2 plus 3, you get 4. It also refers to the difference between your opening and closing cash and bank balances. So this amount will be the total of this, and this. And this amount also represents the difference between your opening and closing of the cash and bank balances. If increase, we show positive. Decrease, we show negative. And next, you have to show what is the opening cash and bank balances. This is part 5. And then you can get the closing cash and bank balances. So this is number 4. And these two will be number 5. So this amount we will get from the statement of financial position. And if you use the net increase or decrease in cash, add with the opening cash and bank balances, if this amount can match to your statement of financial position as well, it means that your answer is correct. Let's look at the definition. Cash and bank balances in current asset will be indicated as positive amount. If you have cash and bank balances under current asset, this will show positive amount. If you have bank overdraft in your current liability, this will show in negative amount. You need to show the net amount if you have cash and bank, and also bank overdraft in the same financial year. We know that for the, we just talked about the bank. Bank, we have two situations. If you have money in bank, so this is current asset. But if you have a short-term borrowing from bank, this is your current liability. So in the presentation of your cash flow statement, you have to net off. You have to net off your current asset and current liability, the bank amount in the cash flow statement. So that's all for the explanation of the cash flow statement. So in the next video, I'm going to show you how to prepare a cash flow statement for the company. So I will see you later. Thanks for watching.